All right, guys, back to work. Back to work, boy. Pretty good day today. We just keep picking those bottoms in this overall bull market. Boy, now markets are range bound into big inflation numbers, big inflation news coming tomorrow. We definitely have to plan around the news. The news tomorrow is definitely a big wild card. We'll talk about that tonight. But I'll tell you, I always get excited whenever we see ranges like this on the charts because it's so easy to make money with range bound markets. I have a handful of good trades I'm tracking for tomorrow. We'll cover all my favorite trades tonight. By the time we're done tonight, you'll have a pretty easy roadmap to make money no matter what the news does tomorrow morning. Now, before we get started, though, before we jump in and talk about my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoyed these lessons, if you like these videos, hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But let's get this party going tonight. Thursday is right around the corner. Got some big news coming tomorrow. And man, when you see the ranges we're dealing with tonight, you'll see why I'm so excited for tomorrow morning in our trade room. Now, starting off, of course, as always, on these 60-minute time frames, Nasdaq triple Qs are ready. The S&P and the SPY is ready. There are three important clues on these charts right now that are telling us where the best trades are going to be for tomorrow. One of the important clues is right in front of us on this 60-minute, and that is, of course, we are an overall bull market. You know we're an overall bull market because look how the market separates off the 21 moving average going higher, and then look how the market sticks around the 21 EMA as it pulls back. Some folks might call this a big bull flag off of that high. So I know we're pulling back in the short term, but this 60-minute time frame definitely gives us one of three very important clues tonight. It tells us to focus on the long side here as we keep pulling back. Now, in a moment, we'll talk about two more important clues on our tick charts, which we'll look at in a moment. Before we do that, though, let's grab the schedule for tomorrow because there's two things you want to be aware of. First of all, tomorrow is the end of the month. Now, why is it important? Well, because usually the end of the month means more volatility. So we do expect an uptick in volatility. Tomorrow, of course, is a leap year, right? Pretty cool. We don't see February 29th very often, right? Every 4 years. So end of the month, volatility, expect the uptick in volatility for tomorrow. But the big news tomorrow, the big news of the week really is tomorrow morning. It's not the jobless claims. It's the personal income number at 8:30 Eastern time. It is widely known that this is the Fed's favorite inflation number. It's not the CPI report we saw last week. It's the personal income number. That's our big catalyst for tomorrow. And that, kind of makes our job a bit more difficult tonight because this could be anything, right? Could be anything we might see tomorrow off that number. The most important thing right now is don't overthink it. Don't overthink it. It's very easy to get into the weeds around these numbers. Don't overthink it. I'm going to give you guys a pretty simple roadmap tonight. The most important thing is tomorrow we're not going to trade the news. We'll trade the reaction to it tomorrow in our trade room. So come out and join us 8 o'clock Eastern time. We'll watch the fireworks, hopefully some fireworks at 8:30 Eastern time, and we'll trade the reaction together. Now back to our charts because the money is made on the charts. Let the news come out tomorrow. Don't get too overthinking it. Now let's talk about the game plan. I talked about one important clue on the 60-minute time frame. We're bullish overall. Let's now drill down to our tick charts, and let's talk about two more important clues we have on the tick chart. Now this is a 7,000 tick chart you'll notice linked up in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. I believe it's the only indicator you need to make lots of money trading along with us every morning in our morning trade room. There are two important clues on this tick chart. The most important clue, though, is this bear market into a trading range. Now remember, we already know on the 60-minute time frame we're an overall bull market. That is the overall directional bias, as we call it. This range, though, pretty much tells us the exact way we want to trade this for tomorrow. Two things about ranges, and we talk about this a lot, of course, in our free video classes. One is that ranges act like magnets. One part about ranges. The second thing is that ranges love to rotate. They go down, they go up, they go down, they go up, they go down. Now, we're an overall bull market. So if you understand that ranges like to rotate and ranges act like magnets, then we begin to look at this and start picking bottoms with probably what we'll look for are bear traps off of that low, right? That range is really, really important. So keep it in mind. Now, the second big clue is we have that big news report tomorrow morning. The big news report is a big wild card, right? It's a big wild card. We might see this market. It may rip lower. It may rip higher. It may chop around inside. Nobody knows, right? Nobody has a crystal ball for the news. So my favorite trade for tomorrow would be those bear traps. And I think we've got about 3 different variations of bear traps. We'll talk about that in a moment. We'll talk about that first. And then later on in the video, the least desirable is we really don't want it to go higher, right? If it goes higher, this is tricky, right? Going higher is tricky because, again, that range is a magnet. It can be easy to make money or lose money if you're not paying attention if we go higher. So later on in the video tonight, we'll talk about if we go higher, right? Because we got to put a game plan together on that. That's not going to be as easy. First things first, though, let's talk about if we go lower. All right. Now, again, the big news tomorrow, it could be a big move down. The most important thing is that as we go lower, I don't know how far it will go, and I do know we're pretty bearish in the short term. So for me to get into something, I can't pick that bottom. What I'm going to do is use what we call a bear trap. Now, bear traps, we talk a lot about these, of course, in our free video classes, but it's very simple. Rather than trying to pick the bottom on this, I'm going to wait for the bears to come in and sell short once, go higher, and sell short twice. Can we all agree this would not be a very smart place to sell short, right? You're selling short at a low price, right around key areas of support in an overall bull market. But hopefully, there are some rookie traders out there that are not paying attention and they chase this thing. They overthink the news tomorrow and get trapped down here. Now, look at this pattern looks like. It's a higher high in price, and you'll see it go right below the low of that prior swing. The proper signal candle, which we talk about a lot in our free video classes, and this is your bear trap, all right? So once again, if I can get this market now to run lower, again, I'm not going to pick the bottom on it. I'm going to trap those bears in, use that bear trap pattern we talk about in the video course, and squeeze those stops, right? Think about where those stops are going to be, and squeeze those stops and run back up into that trading range. Again, ranges are magnets. Now, there's a pretty good chance this thing just rips, right, and runs back up. We talked about that slingshot reversal idea in last night's video. But I'll tell you, a lot of times what happens, though, is a lot of times we'll get our first target and we'll end up holding the underbelly of that trading range. The market will come back and try to go again. These are one of my favorite types of trades, these double bottom reversals, right? So keep an eye on the underbelly of that range for some targets. And if the bears come in, if they hold that underbelly of that trading range, again, hopefully it keeps on going. Right? Hopefully we'll all get a huge paycheck off that bear trap, off that low. But be aware, they may hold the underbelly of that trading range. And if they do, we're now going to go in and use what we call a double bottom reversal. Now, double bottom reversals, I can be a little bit more aggressive on the entry. If they get back and retest that low again now, remember, this is not a great place to sell short, right? So if I can get the rookies coming in, trying once, and trying twice now. Now, pay attention. This would be a 2-try failure pattern we teach in our video classes. It's a little more aggressive than a bear trap pattern. You could absolutely use the bear trap. I wouldn't complain about a bear trap, but you don't need that technical bear trap whenever we retest that low. But once those bears try once they try twice now we know exactly where their pain is. Now we know those rookie traders are caught short overall bull market at an area of support, and now we can squeeze those stops. Again, this would be a 2-try failure pattern let me teach in the video course. Now, as we go higher, I want to buy as low as I possibly can, and my favorite way to do that is always going to be a bear trap. Watch as it goes higher and watch for this pattern. It'll pull back and barely miss that 21 EMA. Then you'll see a higher high in price and a trap right below that low. If we're lucky, watch closely here. If we're lucky, we can draw a trend line off those new highs, bring it down off that low. We can combine that bear trap entry along with that hidden channel. Those are almost guaranteed winning trades. So think about this sequence for tomorrow. And again, I wish I had a crystal ball. I wish I knew how far down it might go off that news. But no matter what, If it runs lower, could be here, could be here. I don't know where it'll go, but trap those bears in. Use that bear trap pattern. 1 try, 2 try, trap low. Keep an eye on the underbelly of that range for a target. Again, hopefully it'll keep on ripping. Hopefully we'll all get a big paycheck off that big short squeeze, off that low. But if they do hold that range, then watch that double bottom. Again, it'd be great for a bear trap, but a 2 try failure. And then into that, again, that trap pattern to buy as low as we can. If we're lucky, we'll get that channel and combine the entry off of that channel. All right. Now, I know that most of you guys watching right now, you know these patterns, right? You've taken my free video classes. You're making money with traps, failures, trade in those reversals. But if you're watching for the first time right now, this might be a brand new language for you. This might be way over your head. But don't you worry. I teach all these entry patterns. I have hundreds of examples, traps, failures, pullback combinations, all taught in more detail in my free video classes. What I'll do is I'll put a link up top here for you. I'll hook you up. I'll put a link up top here for you, upper right-hand corner. Grab that link and take that free trading course, because the strategy you're going to learn in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then I want to make it easy for you to start making money on your own. I'll teach you 4 my favorite entry patterns to kickstart you making money. Guys, these markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you're struggling to qualify for a funded account at Top Step or Apex, hit that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. And also, too, keep in mind, too, if you can't grab that link up top there, I'll put all the important links we talk about tonight in the description of the YouTube video. I'll put the free course links down there. We trade together every morning in our morning trade room, 8 o'clock Eastern time. I'll put our membership trade room links in the description of the video. And also, too, if you're on Twitter or X, I post a lot of updates on Twitter or X during the day. If you're on Twitter, put my handle down there, hit me up there, give me a follow, and I'll see you in between these videos on YouTube. All right, guys, so now you know, though, now you know how my game plan is if we run lower. And again, I don't know how far we're going to go lower, but I do know I'd love to trap some bears in, use that range as a magnet in combination with the overall bull market, trap those bears in, higher high in price, bear trap, and then back up. Now, one more thing here. One more thing. I love the idea of a bear trap down here. I love the idea of a double bottom as well. Right? I love that stuff. But you know what? Sometimes we don't get it. Sometimes there are so many buyers down here, we just boing right off that low. And because tomorrow's a big news day, you know that V bottom is certainly potential. Not my favorite, not the most desirable, because again, we may not get that good signal down there, right? I'm not in the business of picking the bottom. I don't know how far it will go. So if we get this thing running lower and it just rips off that low and begins to grind going higher, okay, watch closely now. You do not want to chase this going higher. What I tell my students in our trade room is that once that little voice in your head starts saying, come on, man, get in, get in, get in. Once you start thinking, I better get in this thing, that's when you know, hold on, draw a trend line off the high, bring it down off that low. Makes sense? That finds a channel. Now, as always, look left, right? Look left and find some of these prior swings. My favorite entries on these V bottoms, I don't chase after it. I look left, I find prior swing, and my goal is to find an entry around one of those prior swings. I want the first touch, the first test, right, is the best test off of that channel. Now, this could be a bear trap, like I'm showing you right here, right? Traps happen below prior swings around that channel. It could be a bear trap. Oftentimes, we'll see stuff like this where it gets underneath the 21 EMA. The bears will come in, try to short that thing back down again. They become trapped as well. We look for failure patterns. We look for pullback patterns. And we look for possibly strength patterns as this thing potentially squeezes back higher. Could be traps, failures, pullbacks, strength. And again, that may not mean anything to you right now. Take that free trading class and you'll learn all the entry setups I'm talking about here right now. So again, if we don't get that bear trap down there and it springs off of that low, all right, now you know my goal about how to trade it. And again, be aware of that rundown and that retest and that double bottom back up. Man, oh man, if there is a trading god up there watching down, we'll get one of those for tomorrow. Now, the next question is, What if we go higher? I mentioned earlier, this is not the easy one, right? Going higher is not the easy part because now that range is a magnet, and we're an overall bull market. So let's grab the Nasdaq. The Nasdaq is getting lonely over here. I know, Nazi. I'm coming to you, buddy. I'm coming to you. Okay, on the Nasdaq here, on the 60-minute time frame, again, you know we're bullish overall because the 21 EMA tells you so. Look at how the market separates off the 21 right there. See it? It separates off the 21. Now compare over here. No separation. That's how you know it's still a bull market. Okay, so don't confuse this pullback right now with a reversal. It's not a reversal. It's just a pullback. Again, you might call this a bull flag, right? Big move up, bull flag. What seems to be happening right now is we had that huge move up from those big NVIDIA earnings last week, and the market now is trying to dig lower, trying to find enough buyers here to finish off a retest of the high. Right, we went so far, so fast. The buyers are trying to pull back and get in at a lower price. That's what creates these kind of choppy pullbacks here. Let's go down to the tick charts now. Now, this is a 4,000 tick chart, be aware. Different time frame of the Nasdaq because the Nasdaq is almost half the volume as the S&P. And you'll see right away, right, the same situation here. We have a bear move into a trading range. And again, ranges, you can see a good example here, right? Ranges love to rotate back and forth. They go up, they go down, they go up, they go down. And again, knowing that we have, you can see that beautiful triangle, we get that beautiful pendulum swing. This all, by the way, all this stuff, all this technical analysis, you will learn. I have a lot of examples of this inside the free trading class. Now, again, big news tomorrow morning. Without the big news, we should be trying now to rotate all the way back up and take out the other side of that trading range, right? That's what should happen next. Now, again, that big wild card tomorrow is that big news event, which, by the way, you see marked up here, that breakout leg, measured move. We talk a lot about measured moves in the free trading course, but let me clean that off here real quickly. I want to leave it on there so you can see what I'm looking at for tomorrow if we go lower. Now, this is the same game plan as it was on the S&P. We are in a horrible place to sell short. Right? If you're a bear right now, this is the last place you want to sell, right? You want to sell way up here. You want to sell the high of that trading range, right? You don't want to sell down here. So the same thing applies, right? The same thing applies as we go lower here. I'm trapping those bears in. These are rookie bears, right? Bears once, bears twice, getting that bear trap and that run higher. And again, do not forget about taking profit at the underbelly of that range. Hopefully this thing keeps on ripping, right? And it certainly may. But if it doesn't, you'll be happy you took some profit off at the underbelly of that trading range, and it may roll over. If it rolls, retest that low again, do it again, right? Do it again, that 1, 2. Now again, remember, this is a technical bear trap, and this will be a 2-try failure. Okay, I would love a bear trap on both of them, but there's slightly different patterns, right? You guys will learn that in the free video class, and again, that run back up, and then we do want to get that technical bear trap, higher high in price, and that trap pattern below low right there, all right? Again, same game plan we talked about on the S&P, and again, if it does rip, going higher. Now, that reminds me, right? If this thing turns off the low, if it turns off this low and starts running higher here right now, our biggest challenge will be we don't want to buy high. This thing just rips off of that low, I don't want to chase it, right? You don't want to chase it because, as you saw earlier, there's going to probably some channels here. You don't want to chase it up here. You don't want to buy up there, right? Remember, it's pretty bearish here in the short term. But again, we're not an overall bear market. We're an overall bull market. So I'm watching for, if we go higher here, there are 2 patterns to look for, right? One, if we go higher, is you want to focus on buying as low as you can, right? You want to buy those bear traps as it rotates, right? So again, it'll be a higher high in price. It'll usually be just a little bit above that moving average, right? And then it'll pull back below that prior swing. That's the pattern you look for if this thing just rips and runs higher. If it pops up, begins to grind, okay, that's the easy one. Okay, that's the easy one. You know where the market wants to go, right? You know it wants to finish off its rotation. Just a matter of not chasing after it, right? Mark off that high, mark off that low, look left, as we always say, find swing lows, and then use those swing lows in combination with that new channel. Again, these are very high percentage trades when you get stuff like this, right? When it pops up off that low, it's a range. We know where it wants to go, right? And we're trying to simply resist the temptation to chase it going higher. That's the hardest part, The hardest part is, if you're anything like me, is that voice in my head says, come on, man, get in. You're missing this. You're missing this. You got to remember, don't overthink it. Find the pattern, wait for the pullback, and then use a bear trap, use a failure pattern, a pullback combination pattern we talked about a few moments ago on the S&P. Now, if we end up all the way back to the high of that range, right? We end up all the way back to the high of that trading range. I can look for a short off the top of that, but I have to look for what we call a crown reversal or a bull trap. Okay, be very careful shorting off this high, right? What we want to do is, if we take out the other side of that trading range, right? Other side of the range up here. Remember, we're a short-term bear market, right? So there will be resistance up top here in the short term on this trading range. If we start seeing, if these buyers come in and they try once and they try twice, remember, it's a lower low in price. Why lower low? Because buyers want to buy low. Right? They want to buy low. So as they go higher and begin pulling back, they'll try once to keep it going higher. They'll try twice to keep it going higher. Then think about this. All their stops now are sitting right there. We need those stops to fuel this reversal back down again. Now, the most important thing is you don't want to sell low. You don't want to sell as it's going lower. Why? Because we're bullish overall. And there might be some bulls right there to hold the low of that channel. So you don't want to sell it as it goes lower. What you want to do is you want to run up into resistance, trap the buyers once, trap the buyers twice, and get a bull trap entry or a crown reversal entry, we call these in our trade room, right? A crown reversal. That way I'm already in the green on that trade. If we do get a channel coming across the high, off the low, if it does hold and keep going, because again, it's an overall bull market, I'm already taking profit down there. I'm not selling short down there. It's very important we understand that very important detail about a reversal off the high. All right? So watch that as it goes higher. And remember, whenever we go against that 60-minute time frame, these are half-size positions, quarter-size positions. If you're brand new to this stuff, it might be zero-size position. Let's get you making money consistently going with the trend, and then we talk about reversals once you're consistent. But for a lot of us in our trade room, though, be looking for that tomorrow morning. Now, again, we may end up rolling, and this thing may really run. Remember, there's a big news tomorrow morning, right? Big news tomorrow. I don't know how far or what direction it's going to go. If this thing really rips higher, now what we'll do is, this is very important, so pay attention. Now what we'll do is, we're going to now flip this area from resistance into support. Okay, this whole area basically becomes a support area now, right? Makes sense? So if this thing, again, and it might be bear trap in, it may be V bottom, it may be just rip, I don't know, right? But if it does rip off that news tomorrow, we don't want to buy high. We want to look back at that range and use the top of that range as an area for a breakout pullback. Right? This is the same principle we talked about earlier. If we get that bear trap off the low and we run higher, right, the bears are often going to use the underbelly of that range to hold that as a breakout pullback for the bear side, right? So if we end up ripping higher here, it's the same idea. It's just what was resistance now becomes support, and we now look for a pullback from there. Now, these are usually pretty simple, right? Because at this point, we'll get that big run up, and most of the time what happens is there'll be some big channel here, right? We'll find a channel off the high, off that low, and we'll start getting that deep pullback, right? Now, the key is get underneath the moving average. Remember, I don't know how far that pullback will go, all right? I gave up on picking entry, tops and bottoms a long time ago. It's kind of a rookie thing, right? We're never going to have the ability to get enough to pick that exact bottom, right? But what I do know, though, is that once we have that strong breakout like that, I know that high becomes a magnet. It's going to want to retest that high again, right? Anytime we see a strong move in one direction, we expect a pullback and a retest of that high, right? It's just the way price action works. It's the way momentum works, especially in an overall bull market. So what we'll do is we want to get underneath that moving average. And again, think about this. Don't pick the bottom, but trap the bears in, right? Let them try once, let them try twice, and squeeze their stops, right? Squeeze their stops. When I make a strong run down, into an area of support, right? All I do is wait for 1, wait for 2, and squeeze those stops back up. Take that 1-to-1 first profit target, move that stop up to your point of entry. Hopefully it keeps going. Sometimes it doesn't, right? But over here though, now we squeeze those stops, right? Trap those bears in. Use that 2-try failure pattern we talk a lot about in the free video classes. Get that failure, get that pullback. And again, we know where the market wants to go, right? It wants to go back up and retest that high. That's where our half off target goes, our 3/4 off target goes, and you better leave a runner for tomorrow being a news day. All right, guys? So that is the game plan, right? If we go lower and if we go higher, the most important thing if we go higher is what? Don't chase it. Okay, do not buy high. As we're going higher, think about those 2 types of entry patterns. One is that bear trap pattern. The other one is that pop up and that grind, right? Find that channel. Or if it really rips, don't chase it. Wait for that pullback, right? And then look for that 2-try, for that breakout pullback. Trap those bears in. Find that new channel. And of course, we'll do it together tomorrow morning in our trade room. All right, guys? I'm getting excited finally getting this news out of the way tomorrow morning. That's the plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with us. The easiest way to start making consistent money in any market is come out and learn this stuff and trade along with me every morning in our trade room. We open up tomorrow morning, 8 o'clock Eastern time. I'll put all the important links, all the stuff you need, the description, the free class links, the trade room membership links, the Twitter feeds down there. I'll put it all for you guys in the description of the YouTube video. Hope you enjoyed the video tonight. Hope you learned a lot. Hope you use this knowledge to make a lot tomorrow. And hopefully I'll see you sometime soon. Trade along with us in the morning trade room. Any questions, concerns, comments, issues getting started, don't be afraid to call the office or use live chat. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.